Hello everybody and welcome back to the Crypto Potluck. In this video we are going to be jumping into a lot of technical analysis. I like to consider myself a financial advisor or at least a financial planner, predictor, or anything of that subject, even though legally I can't specifically say I am one. There's too much liability and I don't want to get into that. So for legal terms, I am not a financial advisor. But I do a lot of programming. I do a lot of data science to really get a good rhythm of the market. I specialize in Python, Django, React now, and a few other things, and I'll be showing you guys some of the projects that I've been working on. And I haven't been posting as much videos as I would particularly like because I've been juggling other projects that have been taking my attention. But I do want to jump in for 2019, and I want to have a good scope of what is going on with the market around us. And I want to start diving into really what does 2019 have to offer as far as the technicals are concerned. Where are we looking at, and how far of a drop are we really expecting, and how do you really position yourself in a way to limit your risk in going into this new year? And this has been the thing that has really been grabbing my attention as I've been looking at the politics and the markets and how they are all intertwined. And I think that right now is still a very crucial time, and I've done very well at calling these markets. If you dive into my past history, I have called out specifically the rocket in the gold market, the collapse of the Dow Jones. I was the first one to call the collapse of the Dow Jones. I was the first one to call the rise of the gold market. I was the first one to call, the collapse of Bitcoin, to the consolidation that we've seen right now, and the explosion in Bitcoin, which we have also seen. So my history speaks for itself, and we'll dive into a little bit of those as we go throughout this video. So to start off, let's start off with the Dow Jones, and I'll show you guys where I initially called the collapse of the Dow Jones, which would be right about there. But in general, I think that we're seeing consolidation. This could prove the catalyst needed to give us a little bit more momentum in the cryptocurrency market. As this consolidates, maybe the cryptocurrency market will look more enticing for some of these huge banks and everybody else that basically works within the Dow Jones. But what I would be looking for is consolidation at this point. We have definitely extended too far. I think that we can clearly see that there was a channel that we have been playing within. It's a very steep channel in general, but I do not like these highs. I do not like getting up to the high and then getting rejected again, and I can definitely expect us to consolidate, especially because in the US we are nearing the midterms, and for that reason the markets kind of work in conjunction with that. That's just how it is. It's all politics and money. But what I would be looking for is hopefully consolidation. If we can bounce off of here, that would prove really strong for the market, for more catalysts for us to just continue to go have a really good market in the US and just in general. But if this does, I'd be scared if we start breaking down. That would be very worrisome for me, and I would make sure that I didn't have any assets within the stock market. Now, since I called the collapse of that, I've been telling you guys that the main assets that you really want to be looking to get into is going to be the gold market, and cryptocurrency since that time has had a lot of struggles until we really crossed this green line, and that's whenever we really saw the explosion in Bitcoin in retrospect as an asset which people have been hedging during the fall of the Dow Jones. And I think that may continue, but I think that we can also see a little bit more consolidation within the cryptocurrency market, which we will go into as we continue this video. But to talk about this, I think that the best way to approach the Dow Jones is to use a reference point of past times that we have really consolidated drastically like we have seen right here. And I don't think that you guys really get the whole scope of the Dow Jones and to really understand it until we move into the weekly graph. And this is one of those charts that really makes sense whenever we dive into the weekly graph. And I don't think that a lot of people, they are more focused on the short term, the one-day candles and all that, and they aren't really looking at the broad spectrum. But this broad spectrum tells the tale of how these markets really have interacted historically. So with this, where are we expecting to consolidate to? From my perspective, how far of a drop can we expect and how far can we go? I think I have outlined it here for a really good spot for us to consolidate to. And this is the nasty thing of how much farther do we have to go. And this signifies that we are really just getting started in this fall that is going on right now. And I think that the bottom would be the blue line, which I have also outlined right here. Now, I'm going to make a pretty decent argument as far as the technicals are concerned to basically outline why I think that the blue line is a solid point where we could be expecting. But if we go from, the highs, which will go right here, all the way down to here, we got about a 30% drop. It might even go down to 34. Now, that sounds crazy, but the thing is that this graph, this bull run that we have seen it within the markets is actually really, really historic, and it's a really nice bull run, and the amount that we would be consolidating would not be as bad as we would think, because if we go back historically, right, and I think that's the good one to go back into. If we scroll down a little bit, you can kind of see that this is in 2009. This was the recession time, and this dropped a total of 50%. So that's the thing to really notice, you know what I mean? And I think that what this is going to be more attuned to, because you also have to take in the bull run compared to how far it has dropped, right? That's how you can get a 50% decline. But if we go into another one, which I think would be the last time that we really saw, a downturn in the market, which would have been 2002 about 2002. If we go to here, we can see that we got about a 35% drop in the market. So we're already on tune to just continue to consolidate, and I think that we could definitely see that 33% drop in the market, and that's going to make this year in particular a really hard time to be trading the market. And you do have a lot of advisors and people who are really high up within the Federal Reserve really trying to blame trading bots and all this other stuff. And yes, trading bots have become more prominent. There are also a lot more players within the market, and the thing is that the hedge funds know that, and the way to basically profit most is to basically increase the swings within the stock market, and as a deliberate sense is basically bleed out all the normal investors, all the people who are looking to retire right about now. Because if you think about it, during the baby boom, right, most of the baby boom generation, they're in their 60s about this time, and they are at the point where they are looking to retire, cash out their funds, and the best way for these hedge funds to profit off of these baby boomers is right before they seek out their retirement is to hit them one more time, bleed them out in the market, and then grab their positions whenever they are all going to be trying to cash out of their retirement funds. So I definitely think that one of the things that people should be looking at with these markets is how much of the market is controlled by the older generation. And I think that the baby boomers are the specific generation that we should all be focusing on, because they are all at that point of retirement. And for that reason, I think that the stock market in general is going to continue to bleed out. And I think that we're really going to get confirmation of this. And I'm going to jump back up into a one-day candle so that we can get a better idea and a better sense of what is going on. Is if we go here, we're already starting to get rejected. And I think that Monday, we're definitely, even if we do get a green day, the thing is we need to hold above this line to continue this trend line. And what this trend line really is this is a historic trend line that we have held. And once we broke through this trend line, this is where I really just signaled that, you know what, it's not good. The fall is just going to continue. And that's why I'm just calling within the Dow Jones that the collapse, if we do get rejected, that's a far collapse. So if you do have assets within the Dow Jones, if you do have assets within the stock market, this would be the time to really be consolidating your positions and to be going into more safe investments. Particularly gold is a relatively safe investment. I've also signified that water investments, as far as water reserves, there's a lot of water ETFs that you can jump into, and basically I think that is another just solid investment in the long run. And you can go into a little bit of silver if you want, and you can diversify into cryptocurrency. And I think that that's the reason why we'll jump into cryptocurrency right now. And I think that that's the reason why cryptocurrency, even though this looks brutal, we have seen a jump in cryptocurrency. And if we dive into, we'll dive into the 1 hour, we can kind of get a better idea of what is going on here. But we can see that, you know, things are looking relatively interesting. We got a nice bounce. We called the bounce right about here whenever I told you guys that I was going to jump back into cryptocurrency for a week, as you can see here. And the fall was a lot more than even I was anticipating. And luckily, you know, I bit my tongue and I just held gold a lot of the way down, and I haven't said much about cryptocurrency at all. But today is the day where I'm going to start changing that, at least for this week, and I'm going to start inching back in a little bit more into cryptocurrency, and I'm not going to be shorting it like I have been since the fall. And I think that we're starting to get to a point where it is definitely oversold. And now we have our week, and we are back at the point where it's like, okay, let's reassess. So in order to do this, I'm going to jump back into the 1 day, and we're going to try and do a nice reassessment. So what I am worried about is we have a huge cloud on the Ichimoku cloud for the 1 day. I like to use the Ichimoku cloud as an indicator. It does give me a lot of valuable information, and what I would be looking for is for us to continue to rocket up until we consolidate at the 4K mark. I think that we're going to have another run up to 4K, but then I think that we could definitely get rejected again. And then I think that what we're going to have is we're just going to have a panic within all financial markets for a little bit. Going into the new year, I think that you're going to see the collapse of the Dow Jones. A lot of people are going to be expecting Bitcoin to just be exploding, but the fact that it isn't is also going to cause chaos within the markets, and then it's going to be a game of chicken between both of these financial markets to see which one breaks through. So in general, what I would be looking for is for us to consolidate underneath the cloud before we start getting another breakout. And I think that right about here would be the good place to be looking at for us to consolidate to, and then that would provide us leverage to start bumping up underneath the cloud. Now this can all change depending on the day or depending on the politics that basically makes this happen faster, or could change the graph in particular, because as an investor, as a financial investor, you really cannot stay locked into your perspective or into what you think is going to happen. You need to know that you cannot control the markets, you cannot predict the markets, you have to basically go with the rhythm of the market, and that means being able to change your perspective on what is going to happen and what isn't. And this is why I always promote within my own community, number one, manage your own portfolio, and number two is always question everything, and you know, always try and think of different scenarios that could happen. But as far as this is concerned, this is my particular outlook on Bitcoin right now and what I'm really focusing on. Now, there's a few other assets within cryptocurrency that I've been looking at. XRP is going to be another one. We have had a relatively good jump in XRP, and I think that you could definitely, it looks a lot easier whenever you start getting into these other assets, and you can kind of see how this trend really would work better, because you can see that right here, we can see that we have our consolidation point where if this continues, especially in XRP, right, and if you're looking to get in cryptocurrency, Bitcoin looks a little bit more scary than, for example, XRP, but you get the consolidation down here underneath it, and then you have this. Now, why is this important, okay? Because we're seeing the crossing of these Ichimoku clouds where we have the green line and it's getting ready to a point where it's going to start to go over the red. Now, this basically provides us momentum, and what we want to see is a nice jump once we get to this point to basically pop right above, and then we're going to ride this green Ichimoku cloud up to new highs, and that is going to be the breakout that we're specifically going to be looking for within the cryptocurrency market. And I think that this is going to happen, and I think that the winner of this chicken game, especially if you look at the time frame of cryptocurrency versus the Dow Jones, is I think that cryptocurrency is going to get its pump. And if you look back at the Dow Jones, and I'll jump into it one more time, we can see that in the long run, you know, this is a lot longer of a time that this is going to last. So for that reason, cryptocurrency is around the corner, and just basically position yourself and get ready for what is to come. Now, let's dive into a few other assets, because I think that there's two more assets that we need to specifically dive into to get a good rhythm of the market, and we can dive into hundreds and hundreds of assets, but I'm only going to be focusing on two more. And the other two that I really want to be focusing on is gold. Now, gold is doing amazing, and if you guys remember my past investments, I told you guys to be getting in right here at this level, and I'll put that up on the screen right here.
the one to be looking at is going to be the gold market, and I think that in general where we're at, we can definitely expect a nice jump. And I think that because we are gearing closer to December during the holidays, everybody's going to be buying gold for their fiancés, you know, for their loved ones, and I think that you're definitely have a good opportunity to see gold rise in value as people are going to be wanting these items. I think that you can easily get a run up to, you know, the 14% return and then collapse back down and hopefully use this as support, which is going to be at 8%. But I think right now this is a steal, and with the Dow Jones where it's at, with Bitcoin where it's at, this is the time to be looking at gold.
Now, I told you it would take some time, and it did, but we finally got up to it. We're at 8%, and I told you guys we can always go up to 12. And I think that as the Dow Jones collapses and as this continues, gold, gold, gold. And for the older investors, if you look at the baby boomers, they have always had a love fixation on gold. And as a young investor, as myself, you need to appreciate the older investors, and you need to see what they're going to be doing because they own the markets right now. They have the majority of the market cap, and as the baby boomers, they've had a lot more time to build up their assets and their portfolios. So what they move into makes a lot more of a difference. And just as a safe investment, gold doesn't move as much as cryptocurrency or the stock market now. So I think that we could specifically have a breakout on gold. And what I would be focused on is if we go over here, we can start to see, you know, if we do a wedge, and I've always signified the importance of wedges and angles and all of that. But I think that during this time, you know, if the political unrest continues, if the Dow Jones continues to consolidate, if the housing bubble continues to pop, you are going to see this wedge as a perfect opportunity for a gold breakout. Now, we're going to be getting up to the high soon, and this is where I would recommend selling some of your position in prep of a consolidation. But then eventually, if we can consolidate right here and we can get that breakout, gold could be the mover to actually have one of the last main huge runs in the gold market, which I think could happen in 2019 to 2020. So this is going to be one of the assets that I am still going to be watching very, very closely. I have a lot in this asset, and I'm going to continue to ride it up until the wedge, and then that's whenever I'm going to be selling off these positions and see what discounts I can get and move these assets within the cryptocurrency market or the stock market, because there are going to be a lot of really good opportunities once we get up to here at this point. And that's the thing, it's how you move your chips around. So with that, let's talk about the other investments. And I think that the other one that we really want to jump into is Home Depot. What are you saying? Home Depot. Now, Home Depot, I think, represents a lot of the housing market, you know, as one of the biggest franchises really within the U.S. that sells a lot of the home decor, a lot of the building material that goes into home production and all of that. I think that this is one asset that you really need to be looking at to get a feel of what is going on within the housing market. And this is just signifying that if there's a time to be selling your house, it should have been, you know, a few months ago. But right now, if you are in a position where you are trying to sell your house, I think now would be a really good time to be focusing on that because I definitely see that the housing market will continue to consolidate during this time. I think that we've had a huge surplus within the housing market, and you can really see that through the market share of, you know, Home Depot. Like, let's go into the week, and you can really see just how extended this is, and we're just at the edge of it. And that's the thing which I really want to signify, because I think that one of the most hit assets isn't going to be the Dow Jones. I think one of the most hit assets is going to be the housing market. And right here we are seeing the cross, and we have not seen this cross in many, 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 many years. It has only been green over red throughout this whole time. And this cross, it is a straight cross. It is definitely just starting, and we can see where we could be consolidating to. Now, in order to do this, I got to be looking at other markets, and we go down here at the last consolidation, which was during the housing bubble and the housing crash of, you know, 2009, and we saw that it dropped 72%. So keep that in mind. Your house could be worth a lot less in just a few years. Now, with this in mind, we're going to start here and down to here. I think this is a relatively safe place for us to land, is a 60% loss from our highs. From where we are right now, that would give us about a 50% loss. So just in retrospect, if you have any investments within the building, housing, or anything of that nature, I would definitely be hedging your investments a lot right now, and I would be working on preparing yourself for the bear winter that is going to be coming for your particular industry. So those are my specific advice for what is going on within the markets. I try to use a pretty practical approach of how I like to dive into it. I use a lot of outside analytics that I bring into my investing, and I just want to give you guys a little show of kind of some of the different applications I've been working on in retrospect to some of the part-time jobs and other stuff that I've been running with, as I've had a lot of demand to be building out applications and other things of that nature, and we'll dive into that. Now, to finish off this video, I really wanted to dive into some of my past applications that I've been working on within this past few months, and really just outline my goal for 2019. I want to try and get that one step farther to becoming a full stack developer, and I think I'm definitely getting there. And with my huge ambitions of launching my own algorithmic trading application, to get there, I really need to hone in my skills. I need to learn everything from the ground up, and I think I've been doing a relatively good job doing that. And I really just wanted to highlight some of my work, even though these projects aren't in retrospect correlated to cryptocurrency. They definitely do show a lot of innovation, a lot of hard work into application design. So to start off with, we're going to talk about my portfolio. This is my new portfolio page that I've been working on, and it really just dives into a lot of the different skill sets that I have, what all I have done in the past, where we dive into past trades, we dive into deep dives of my articles, YouTube channel, Udemy, programming, Amazon, which I was a seller for, and I did relatively well, me being an inventor, and then we got data science. So it's a bunch of really good stuff. We talk about a lot of the testimonials I have from other people that have worked with me in the past, and what they have to say. We have our Discord right here, which we can dive into, and all the good stuff that's correlated to that. We can talk about my programming skills, and just showing off some of the skill sets in particular: Django, Python, Dash, SQL, JavaScript. React is something new that I've been working on, algorithmic trading, APIs, Postgres, and then you can see a lot of the different applications that I've taken up during this time, where we dive into, you know, some of the new ones, some of the old ones, and a little bit of everything in between. And these are all, you know, completed works that I've done. So we can dive into some of the finished websites, which I have listed, which you guys can dive into, which gives a bunch of the really good data on, you know, what I really did for these, and just dives into what these projects actually were. One of my first trading applications that I worked on to just gather news and work out some of the fundamentals to learn how to build out an application. We have another, which is a real estate application, which I've been working on, which I'll show you guys in a second. We have the actual main application that I do the majority of my work on, you know, where I do my drawings and everything out. That's my dashboard application that I worked on. We have a little RV park application that I worked on. So it's just been a bunch of really good stuff. And this is going to be my real estate application that I worked on. As you can see, you can filter stuff by, you know, price. So it's relatively really easy. It's really cool, and it's just this is a complete realtor's application for like my brokerage and all that stuff, where you can just dive into searching. You have the about page of all the different realtors. You have what they are doing here. Then you have feature listings, which you can dive into, and then you can make inquiries just like that. And then the inquiries actually show up on your dashboard whenever you're logged in. But I haven't made any inquiries on this account. But if you dive into the back end, this is where it gets really interesting, because you can easily dynamically change stuff. So like for these were listed off, and I'm going to just jump back in to show you. So we're going to go into our future listings. We have 1, 2, 3, 4 houses here, right? But if I dive into this, and if I just click save after clicking those, we can see upon refreshing, we got 6. So it's really cool how dynamic you can make this, and you can basically dive into each one of these, and you can change any of the listings any way you want from the back end. So without having to dive into the code or anything like that, the manager of the site or whoever is running this real estate company, they can easily just jump into description. They can list the new pricing, how many bedrooms, bathrooms, square footage, add photos, all that really good stuff. So I've been working really hard on basically being able to create complete applications. And I think I'm definitely at the point where we are doing that. You got realtors, you got a bunch of other really good information on here. And if you actually want, you can actually dive into, you know, contacts. So after somebody contacts on an inquiry, you can see, you know, their email, you can see, you know, what they contacted on, and you can get back to them. So it's a really, really cool project that I took on. And we have a bunch more. This is going to be my RV park application, which I worked on, which you got a beautiful, beautiful, beautiful website. And then you could see that you could just jump into any of these different cards, which show off, you know, different aspects of the area that this RV park is located. You got a contact form to basically contact the RV park. You have the gallery, which is also really nice, shows off the RV park. You got rates, so you can jump into any of the rates and you can book them, and you got the calendar for whenever they're available. And then you have the about page, which talks about the about page, you know, RV hospitality, and then you can directly book from that button. And then, you know, lastly, I've been working on a rental company, and it's one of the biggest rental companies in the small town that I'm living in right now. And you can basically, you know, rent, show off a lot of the work of this rental company. They're basically portfolio page, you know, testimonials, all that other good stuff. So it's been a lot of fun. You know, I've just been really, really busy juggling all these. There's a bunch of other applications behind the scenes that it's just not worth showing. There's just too much on my plate. But in general, you know, I'm getting there. I'm getting closer and closer and closer to that full stack developer goal, which I really want to focus on, so that I can complete, you know, build out complete applications just by myself, because that's the hardest thing, is how tedious this work is. And in order to be successful in it, you really need to know everything, and there's just so much to learn. But it's just taking it one step at a time, and I think that's going to be my New Year's resolution, is just to really be continuing to focus on this work, build out my programming skills, and really just be able to iron out a solution for the community so that we can really integrate, you know, better algorithmic trading, better investing, and all that other really good stuff, and just continue to hone in on my skill sets. So with that, if you guys are looking for freelance work going into the new year, if you're looking for financial advising, even though I'm not a financial advisor, if you're looking for consulting, I think that's the better term, or anything of that nature, you know how to contact me. And with that, I hope everybody else is having a wonderful new year. I hope you have a really good New Year's resolution set, and I hope we can all continue to make money trading the market. And with that, I hope you guys have a wonderful day.